Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello everyone, my name's Manpreet and welcome to Cut to the Chase. Now we have an event-packed week ahead, so let's jump right into focusing on what we believe will be driving financial markets this week. Now first up is of course the much anticipated Fed meeting that's due over 15th and 16th March US time. Now one rate hike of 0 is unlikely to surprise anyone, but the key here will be how the Fed signals it intends navigating today's particularly tricky environment of high inflation and challenges to growth. Now, the ECB's approach last week could provide one template. The European Central Bank said it would wind down asset purchases a little faster than it had earlier planned to, but it did leave itself some flexibility to say that it stood ready to revisit the decision should the economic outlook change. Now, this, of course, came after the central bank raised its inflation forecast and cut its growth forecast for 2022. The market reaction in this case was relatively muted. Gains in the euro were fleeting at best, but German bond yields did hold on to modest gains. So that could offer one template for how markets might react to the Fed. The second factor to watch, of course, is the immediate COVID situation in China. Now, media reports said China imposed varying degrees of restrictions or quasi-lockdowns on major cities, including Shenzhen and Shanghai, amid a new surge in cases. Financial markets are, of course, likely to worry about how significant any domestic growth impact is likely to be and whether these measures trigger any new disruptions in global supply chains. This, of course, comes against the backdrop of Chinese credit growth accelerating, but by less than consensus expectations, and inflation, of course, remaining subdued. Now, these COVID measures could cause some short-term worries in markets, but in our view, it also suggests further policy easing measures could be in the offing. This is why we continue to see Chinese financial markets as one way of diversifying against Ukraine-led uncertainty. Now, this includes defensive assets like the Chinese renminbi and Chinese government bonds, but the MSCI China Equity Index, of course, is also now very close to key technical support. The final factor, of course, is oil prices. Now, if you went to fill up your car over the last few days, like I did, the sticker shock is palpable. And the local media in Singapore, at least, is increasingly filled with anecdotes of the pressure this is placing on industries like taxis and logistics. The good news is that oil prices have largely held steady since they fell sharply from last week's peak, although reports of an impasse in US-Iran talks and Russian military strikes close to the Polish border are keeping markets on edge. Now, if oil prices, staying capped, of course, would help calm some market nerves across asset classes. So overall, a pretty event-heavy week between the Fed decision, the evolving COVID situation in China, and oil prices. In the midst of all these significant events, of course, we are also keeping an eye on El Salvador's Bitcoin-backed bond that was meant to fund a planned Bitcoin city that would use geothermal energy from a volcano to mine Bitcoin. Now, issuance there was planned for this week, but the government said timing would depend on the war in Ukraine. So, a fourth thing to potentially keep a watch on the side there as well. So, we'll pause there. If you enjoyed this podcast, as always, please don't forget to rate and like it. Thanks for listening, and we wish you a happy trading day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.